So I want to start this video by saying that if you invested money in the global US stock market just before the COVID crisis, so literally at the worst moment possible, right now, so 1 year later, you would still be up over 17% on your money. Now, knowing that the average return of the US stock market over a period of a year is 7 to 8%, a 17% return during a global pandemic is pretty surprising. So as I'm making this video, the US stock market is at all-time highs. So the big question is, why is the stock market performing so well while the economy is having so much trouble? So in this video, I'm going to answer that big question every single investor is asking themselves, and I'm going to clarify and explain many different concepts. So to really start this video and for you to understand everything, I first of all want to highlight the differences there are between the stock market and the economy. So the economy is the system under which money, industries and commerce are organized. So overall, when we are talking about economic health, there are two main things we are looking at. The first of all, which is production, and the second one, which is employment. Now on the other side, the stock market is basically a public marketplace where people just buy and sell either shares or financial instruments. Now when we talk about the US stock market, generally what investors and traders are referring to is the S&P 500. So the S&P 500 is an index which represents the 500 biggest companies in the US. So it's a good index, it's a good benchmark in order to know what the global stock market is doing. Now I want to add a few details and perspective about the stock market. Because for sure, so when we talk about the S&P 500 and the global US stock market, for sure the US stock market is up. But when we really look closer, it's only a few sectors, a few companies which are bringing the whole S&P 500, the whole US stock market up. So let's look at this screen, and this represents basically the S&P 500. And this is the performance for the 1 year, okay? So for the past 1 year. And what we can see is that the big winners are definitely the Apples, Microsoft, Google, Facebook, Amazon, Tesla. Okay, these big companies are just driving the market to the upside. However, apart from these big companies and these big industries, we can see that other industries are really taking a hit. Okay, we can see the energy market is really in the red, utilities is in the red, even banks, financials are in the red, airspace, defense is in the red. Okay, so when we look at the US stock market, for sure the US stock market is making new highs, but it's not showing us the full picture of the economy. As you can see, many different companies are in the red, have lost a lot of value this year, minus 20, minus 30%, as you can see with the different colors. But it's only these big companies driving the market to the upside. Now, why do these companies drive the market to the upside and these companies don't drag it to the downside? It's simply because the size of these squares represent the market cap. So you can see that the market cap of Apple and Microsoft and Google is literally worth more than the whole healthcare industry. It's worth more than the whole consumer defensive industry. You can see that Amazon by itself is more important than the energy market, real estate market in the whole of the US. Now, another point that not a lot of people are talking about is the shrinking number of publicly traded companies on the stock market. So we have many different companies that prefer to stay private and are not publicly listed on these stock market exchanges. So we have so many companies that do not trade on the stock market. So I hope that for the start, only these few informations make you understand that the stock market is not equal and does not necessarily represent what is going on with the economy. So now coming to the big question, how can the economy be so damaged, be so in trouble, and the stock market be performing so well? So as we know, COVID basically shut down many different industries. The demand has gone lower because obviously people have lost jobs. People have less money, so less demand, which means less demand, people have less money again, and it's just a cycle. So the global health crisis really shut down many different industries, such as airlines, travel, entertainment, hospitality, and basically COVID has weighted on the consumer's demand. So this leads to unemployment, leads to lower wages, leads to people spending less on consumables, which then makes companies' revenues shrink. So that's the main reason why the economy is in trouble. Now, if we look at the stock market, so before I explain that obviously when we're talking about the stock market, it's really just a few big tech companies that are driving the whole bullish momentum. However, another big factor to take into consideration when we are looking at the stock market is interest rates and the monetary policy. So what you need to know is that the US central bank, which is called the Federal Reserve, the Fed sets interest rates and monetary policies in order to control the inflation, employment, and basically keep a stable and growing economy. So to simplify everything, what the Fed has been doing lately is put interest rates very low, which encourages every investor to invest in stocks simply because fixed income does not generate anything. So if you keep your money in the bank, you're not going to make anything with those very low interest rates. So for any investor looking for some returns, the sort of only way they can get this is through the stock market and investing, buying in the stock market. So overall, if I had to conclude, you need to understand that basically the market is considered a forward-looking indicator, which means that people buy and sell based on future expectations. And this is why we've seen the stock market rally during the pandemic, during the beginning of the COVID, simply because people were expecting a vaccine, people were expecting things to get better. This is why the stock market has been rallying. Now, I know many are going to ask my personal view on the stock market, where are we going from now? And for the short term, I can't say I can predict if the market is going up or the market is going down. The only real thing I have to say, historically, the US has always recovered the different difficulties it faced by growing its economy and having its stock market grow with it. So I hope you enjoyed this video and you found value. If that was the case, please subscribe to my channel. I talk about finance, investing, trading. I publish a video every week, every Sunday. If you have any questions, please feel free to leave them down in the comments. You can also send me a direct message to Instagram, which appears just here. I wish you an amazing day and stay safe trading or investing out there. It was Elliot. Peace.